A busy week of inflation news. The producer price index declined 0.1% in August, giving some relief to the market that inflation at the producer level is coming down. Let's bring in Joe Tigay of Equity Armor Investments. Joe, how are you reading that latest number on inflation?
Yeah, we got a big reaction on the consumer price index, and the producer price index didn't do much to change the narrative of that. While maybe inflation has peaked, the warning is that usually inflation comes down very quickly. If that does not happen this time around, if inflation instead is sticky or takes a longer time to return to the Fed target, that means that interest rates will have to stay higher for longer. That's why the market reacted so strongly on Tuesday. We didn't get much of a change on Wednesday to that narrative.
Do you think that big 1,200-point plunge that we saw earlier this week in the Dow was an overreaction?
It was a correction to me. I think, of course, we were much lower earlier in the year. You think about it, in June, the market was down at 3,600 in the S&P 500. We were over 4,000 before the CPI numbers. So that was a bit of a correction. And while it seems very steep, there's still a lot more potential to the downside if you go back to the year-to-date low. And having said that, that's a big correction. That's a big bear market. It's a 20-plus point drop for the S&P 500. But if things don't turn out the way that the market hopes, if instead this soft landing, if instead we have a recession and sticky inflation, the risk is breaking through that support of 3,600 in the S&P 500 and turning a bear market into something that looks more like 2008 and having a significant correction to the tune of 30, 40, 50%.
Thank you, Joe.
Thanks for having me.
Go to businessfirstam.com for where to see our show on TV.